Hello, my name is Raitis, and you're here at Farewell Total Return Investing and Trading. And in today's evening commentary, we're going to break down the trades from yesterday and today, which we took in the equities markets. We will break down all of that. And just a quick spoiler, we had one initial loss at the start of the session, then we completely recouped the loss with a wonderful 3.6R trade. And today we had a wonderful shot on YM and we completely delivered into our target objective, and the trade was called live on the Discord. So feel free to join with the link in the description below. You can see the trade right here. Send out YM longs, and this is the result. Nice consolidation profile trade, but we will get into that as well. But first of all, let's break down the trade from yesterday's trading session. So we had an initial loss on NQ, which was was already trying to long the market up here with a run into the weekly order blocking threshold again, but you can see market quickly stopped this out. Again, I already said yesterday, Wednesday, if we take a look at the economic calendar, so this was Wednesday, we had a medium impact news release yesterday and a 10 a.m. news release. And then one at 10:30. On Tuesday we had, okay, so everything fine. But again, we had no high impact news release post 10 a.m., only medium impact news release. That's why there was the ability to trade Wednesday's price action. But what did the market do? We created some initial, first of all, we ran out the buy side liquidity and sold off going into the opening bell. But then we formed something on the charts, which is a divergence. But let me quickly look into the charts if we saw any divergence when I was taking this trade at 8:30. Let's see. So it's probably eyeing this low right here. NQ had this low. And I think YM right here. So I'm just looking at the mistake that I probably might have made. I didn't wait for a divergence. And this was probably my mistake. Oh no, so I was looking at this right here, relative equal lows on ES, relative higher low on NQ. And right here we had lower lows on YM. That's why I was trying to long NQ from here. This didn't work out well. We wanted to reprice lower into a discount level before we ran higher, and this is where the clear divergence occurred, which was, you can see we had this major low from Asian session on Tuesday. YM closes below that at 9:30, and ES and NQ close above this low. And once the market closed with the 9:30 candle below the low on YM, I just went straight in and bought the open of the 9:45 minute candle. If we go into the 5-minute time frame, you can see I just was trading the retest of this order block right here with a stop loss below. the order block, and I was targeting this high. No, this is not the trade, but I was targeting this H1 liquidity draw, and I went break even and took out all of my positions at this high because I scaled in again one more time at the rejection block. Sorry, not the rejection block, the breaker block, which is this one, coupled with this 5-minute inefficiency. So as my entry wasn't too perfect, so I longed somewhere up here, stop loss below this low, and I didn't want to see the market really trade back to the order block because we had a BISI, and the protocol for a BISI is we don't want to see the candle close below the 50% of the BISI. So I think I said that enough times. So we had another 2.4 R on that trade as we went break even. So I went break even right here, and this is most of my take profit. I think I just moved this thing up. So this is how it's correctly displayed. So here I went break even. As we traded above, I reduced risk first, and then I only entered the retest of the breaker block, and yeah, this was the trade. So very nice. Yeah, on the first move where we had the long on Q was maybe a little bit rushed, but yeah, this is divergence. I mean, sometimes it may really play out, but yeah, and also the fact that yes, saw a stop run below the rejection blocks, which is also a sell-side liquidity pool. So it is stop run into a key high time frame level, which was the weekly discount rejection block, and market moved and ran up higher. And yeah, we were at the monthly order block high. Market distributed from there and wanted to take one more time sell stops before we ran higher and took out the buy stops above this high. Yes, this is the trade for yesterday. Now, I was commenting on the Discord that today we had a trapped order flow. Now, if you just look at this candle, this doesn't seem so, but if we just go erase today's price action and we would start it this day, you can see on the daily time frame, if you just look at the market structure and how the market is trading, you can see we're rejecting a bullish discount PDRA, which is the weekly order block mean threshold, and we're traded up into the daily fair value gap right here and wicked lower from that. So Tuesday wicked higher from the weekly order block, and Tuesday wicked lower from the daily fair value. So market is referencing both PDRAs. That's why I saw this as very, very, controversial. And of course, right now we are seeing displacement to the downside, heavy displacement. But at that point, things weren't really clear as we had the opening bell because we were trading higher. Saw some displacement higher from the weekly rejection block, but then traded lower and gave up the ghost. In Q, same thing, just sold out massively at the opening bell from, again, a weekly level, a premium, and traded lower into another weekly, monthly premium level, and you can see the response from there. Gave a retracement and then continued lower for another measured move. The only thing why I went in and traded today, and why I traded YM, because YM was really fundamentally strong. Here we had a clear divergence. You can see if we outline these sessions. I should have done that, but I don't know why it's not pulling up. So let me do this one more time. London session and end of London session. So you can see we have New York session right here. We have this low on NQ, we have this low on ES. So both are making lower lows, while look at that, YM is making higher lows and trading completely in the opposite direction. And this is basically this move. We see a H1 stop run. Again, we have a consolidation. We have the initial dealing range low, initial dealing range high. Market sees a H1 stop run below the rejection blocks into a key higher time frame level, displaces higher from there with a nice massive bullish candle, and we are buying the retracement into the 15-minute fair value gap coupled with this order block, stop loss below the low of this order block. We buy that and we target, first of all, the initial dealing range high. There I went break even, scaled out 80% of my profits. And finally, my final target was the rejection block. I didn't hold for the highs because again, we are inside a consolidation profile. I preach this every time. If we are inside a consolidation profile or in trapped order flow, please don't hold for the highs. Aim for the rejection blocks, guys. And yes, it traded above the highs at the end, but it happens so often that we just don't trade below the lows like here. So you can really get left behind, or like this move, bullish move at 9 a.m. The opening bell, we trade higher and just run only this high, and then we leave this rejection blocks alone and don't even trade up there above the high. So yeah, please do yourself a favor and just try to earn money and don't swing for the home runs. And because this is how you make money consistently. I mean, it's up to you, but I learned it the hard way. And yeah, it was a nice 3.27 risk to reward ratio. And yeah, that's it. Again, let me check. Let's look at the Discord chat, what I texted. So you can see from today, I explained the trapped order flow scenario with ES. Then again, I'm explaining it right here. And then yeah, just look at the price action on NASDAQ prior to 9:30. It wasn't clean at all on the 5-minute time frame right here. If you just erase everything like this, if you would have longed somewhere, I don't know, right here, market gives you some profits, trades lower. If you buy the retracement down here, market trades higher, it doesn't run above the high, trades lower massively, sells off, and then off the races we go. So let me quickly pull up Discord again. And then I said, right, patience, just wait for 9:30 a.m. Or London close. And then you can see we're trading the longs for London close on YM. Consolidation protocols, IDR high, IDR low, market runs out sell side on the lower extreme, and we're going to reference buy side as our target, the extreme high of the initial dealing range. So very nice concept, played out literally to perfection. I'm really amazed with my trade management and partial profit taking. I must admit, I went in was slightly above my initial risk. I'm not really proud of that. I should have adjusted it straight away, but market really just took off immediately after I entered the trade. But still, I'm not really proud of that, but my partial and trade management is just awesome. We nearly exited at the high of the day, so this is really, really awesome. But yeah, with that said, we're up for the week, and let me quickly check out the economic calendar, but I don't really want to trade tomorrow. I don't want to push the edge too hard. Yeah, because we are seeing massive downside displacement. So wait, this is, yeah, tomorrow. We have the core PC price index at 8:30 and 9:45 a.m. and our medium impact news release. And just from what I see in the market, I think, I mean, first of all, we have overextension. Just look at the weekly candle. And how much did we drop this week? Or let's measure the last 2 weeks. Somewhere from here, minus 7%. Massive sell-off on NQ. YM, of course, as well. ES. Now, of course, now I'm bearish because we're leaving this consolidation heavily to the downside. And I mean, this screams for bearishness. I'm curious to see how Friday closes the trading session, the trading week. If we can wick back into the range, this would mean we're still inside a consolidation profile. Or this could start another wave of shorts or a correction. Now for that, let me bear just quickly with me. I don't want to cut this video, but I also don't want to make this too long. I'm gonna go on barchart.com and check the open interest on the S&P 500 E-mini. Let me pull this up for you as well. So I pull up the contract for the E-mini futures. Okay, open interest hasn't dropped that hard recently on the weekly. Okay. Okay, that's interesting. Commitment of traders. Overall net short. But open interest is rising inside a consolidation. Okay. Now why is this looking so odd? It's not loading. Let me quickly check one thing. Bear with me, guys. So if market is inside a consolidation and the open interest increases, this is actually a bearish sign in this case. If open interest would decline during a consolidation, this would be a bullish sign. Because street money plays the long side and rising open interest in a trading range suggests that commercial hedgers and professionals are taking the short side, and the uninformed speculators will likely fall victim to the downside in the price break. And that's what we could see. We could see really a run below this weekly low and maybe this low right here. Now let me quickly also study the daily chart. Now we're really getting into the nitty and gritty of fundamentals right here. Okay. You can see here the open interest started to increase. And now we're seeing the massive sell-off. Commitment of traders is nothing too special, but for that we have to go into the weekly chart. But okay, very interesting right here. We have to keep this really in mind. but they are not, the commercials are not really increasing their selling. If I don't know if we can find another price period where we were such inside a consolidation, so it'll be probably hard to find. Or right here we have one. Here we're inside a consolidation. Market sees a rise in open interest. Open interest rises during this consolidation, and then but open interest rises heavily, and we see some shorts come into the marketplace. We take out sell side and then run higher again. Okay. Okay guys, I didn't want to stretch this video too long. Again, here consolidation, open interest increases right here, and then market sells off heavily, while the minimum of traders report goes more net short. Here, increasing net short positions, and then this led to a massive sell-off. This was 2022. Okay, very interesting. I will do another deep dive into that concept later on for the new weekly outlook. I think so. But again, with this said, let's quickly, I don't want to stretch this video too long. Let's see what DXY did. DXY reversed from the weekly fair value gap BC high. It's trading back into the range higher. We have a massive bullish up candle. I think this is a change in state of delivery, and we could really get nice swings to the upside. You can see at 8 a.m. we just completely spike higher and completely violate the daily fair value gap. But bonds are bearish, but not as extensive to the downside as bullish as we saw the bullishness on the XY. Again, T-note futures are just crazy bullish. Euro futures, of course, bearish. Yeah, Euro is much weaker, so Euro GBP should be bearish. Yes. Okay, we could really see market run for the rejection blocks. This is my short-term target on Euro GBP. And everything else, I think we can leave alone. But Euro, from a weekly perspective, we run the rejection blocks. We have a divergence right here. So this could really set up another run lower below this weekly rejection block. And this would be a massive sell for Euro. This is literally crazy. Euro is going to parity back again. I think this is what's coming. Euro shorts, we will be loading up heavily. Pound is fundamentally more bullish. Canadian dollar, also heavily bearish. So USD CAD is bullish, just for clarity. Okay, very nice. So USD CAD had fundamental strength already going throughout the whole week. You can see DXY consolidating while USD CAD was running higher. This means USD CAD has the fundamental strength on its side, and we will see massive upside, and that's what we saw. With that said, I won't stretch this video too long. We could go in really in depth into this whole stuff, but I don't want to bother you guys too long. I wish you all a pleasant evening, a great weekend. Reflect on your trades, journal them, and see what you can learn from your mistakes and also your wins, but also from your losses. This is where you probably learn the most. At least that's how that's what I would tell from my experience. The losses is where I learned the most. And with that said, guys, have a great weekend, have a great night of sleep, and we will see us for a new weekly outlook on Monday. With that said, trade safe, stay safe, bye bye.